After 40 days of gridlock, the longest government shutdown in US history is finally inching towards a resolution. A deal aimed at ending the shutdown has cleared its first big hurdle in the Senate, with a handful of Democrats joining Republicans to vote in favor of a compromise bill that would fund government operations until the end of January. Negotiated between Senate Majority Leader John Thune, the White House, and centrist Democrats, the agreement includes funding for key agencies such as Veterans Affairs and Agriculture, as well as a continuation of food assistance under the Supplemental Nutrition Assistance Program until next September. But this deal still faces multiple steps, including approval from the House of Representatives and the President's signature before federal employees can return to work and suspended services resume. Around 1.4 million federal employees have been affected, with services ranging from air travel to food benefits disrupted. The shutdown's ripple effects have deepened over time. Thousands of flight cancellations, delayed benefits for over 40 million low-income Americans, and an increasingly anxious labor market. From a macroeconomic lens, the reopening of government operations comes at a crucial time. The shutdown has stalled the release of key economic indicators, including that of labor market data that the Federal Reserve relies on to assess inflation and interest rate decisions. And that's the big challenge ahead. While optimism is high in financial markets, inflation pressures remain sticky. Several members of the Fed have warned that their priority continues to be taming stubbornly elevated prices, even as layoffs and weaker consumer sentiment raise fresh concerns about growth. Still, investors are greeting the potential end of the impasse with enthusiasm. US stock futures climbed sharply in early trading. In fact, the S&P 500 shot up nearly 0.7%, the Nasdaq rising 1.2%, and similar gains seen across Asia and Europe. Treasury yields edged higher, gold and silver prices surged, and Bitcoin too reflected renewed risk appetite. The reopening would also allow the Treasury to resume planned bond auctions, a key test of investor appetite for US debt amid what analysts call it a fragile liquidity backdrop. In short, the end of the shutdown may restore short-term stability, but it doesn't erase the underlying economic tension. Inflation remains elevated, fiscal pressures are mounting, and another funding deadline looms at the end of January. For now, markets are cheering the progress, but the real test for America's economy begins once the government switches the lights back on.